Hey, my name is Tucker Kraus, and welcome back to my channel. In today's video, I got another quick news update for you guys, so let's get right into it. There's going to be a lot of numbers, so therefore, a lot of number reading. Alright, so CPI comes in hot. CPI year over year, 9.1%, 8.8% expected, and May was 8.6%. CPI month over month was 1.3%, 1.1% expected, and May 1%. Core CPI year over year is 5.9%, expected was 5.7%, and May was 6%. Core CPI month over month was 0.7%, expected was 0.5%, and May was 0.6%. Read through that all quite fast because, I'm not trying to spend forever just reading through all of them. So there's a couple things we can get out of this. So first up, it's potentially pointing to peak inflation. Now, the reason I say that is because when we look at it here, yes, CPI year over year was higher than May, but the other thing is that core CPI actually ticked down slightly, and that, of course, strips out food and energy. So that could be pointing to, things outside of gas prices and food and things like that are potentially coming down, as well as the fact that even in the last, couple weeks here, oil and copper and other commodities have been crashing in price. And so, of course, I'm not saying inflation is going to come to 2%. We can see here that core CPI and CPI both rose month over month faster than May. But this is potentially pointing like, hey, we could potentially be peaking out here because, commodities are crashing, and we can see that core CPI is already coming down a little bit. No, it's tough to say because we'll also have to look at the producer price index in just a second. Who knows what's going to happen here? We'll have to wait till the next numbers come out. I can't predict anything. The other thing to note, though, out of this is that it's potentially possible that the Federal Reserve now hikes 100 basis points rather than 75 at their July FOMC meeting, since there will be precedent for that since the Bank of Canada rose by 100 basis points when 75 was expected on the day the CPI report came in, though, of course, it's going to depend on a lot of the other numbers that the Fed sees to see if they go with 100 or 75. Who knows which way they're going to go, but it is now on the table. Alright, some bullish uranium news, of course. Right, you gotta have the bearish market news and bullish uranium news. That's how all these videos go, of course. But anyways, Japanese nuclear fleet restarts. The Prime Minister of Japan ordered restarts of 9 nuclear power plants by this winter. For reference, how big that is. As of right now, only 5 are online out of a total of 54 nuclear power plants in Japan. So, of course, this is going to result in a lot more uranium demand, though there's still, of course, a lot more room to grow here, as we can see with 54 nuclear power plants in total, but it's going to be significantly more than there are now. So, of course, if we can see more and more fleet restarts and the world, of course, becoming more and more accepting of nuclear, that's nothing but good for uranium, because even right now, it's, massive supply deficit, so let alone if demand continues to increase. Alright, so PPI comes in hot. So PPI year over year, 11.3%. Expected was 10.7%, and May was 10.9%. PPI month over month was 1.2%. Expected was 0.8%, and May was 0.9%. Core PPI year over year was 8.2%. Expected 8.1%, and May 8.3%. Core PPI month over month was 0.4%. Expected was 0.5%, and May was 0.6%. So similar story here. We can see that core PPI year over year ticked down, whereas PPI year over year ticked up, and so of course that kind of goes into the same thing, like, hey, a lot of what might have been left was in things like oil. And of course, going back to the peak inflation idea, whereas we saw core CPI month over month was slightly more than May, producer PPI was actually a little bit lower, not to mention core PPI was lower, as well as all that kind of stuff, right? Core CPI year over year having been lower as well. That points to, if we take out, oil and food, or energy and food, I should say, that, hey, inflation's possibly peaked in May. Now we look into the fact that, hey, now commodities are rolling over. Everything might have peaked in, like, the regular PPI and CPI as well, though, of course, that's tough to say. This is just the narrative a lot of people are saying online, and it's entirely possible when you look at it. Alright, so retail sales supposedly beat. So on the surface, it looks great. 1% month-over-month growth when expected was 0.9%. So, of course, hey, a beat, great. But only supposedly. Adjusting for month-over-month CPI, which was 1.3%, real retail sales came in at only negative 0.3%, and so of course that is actually a decline, and that's of course not good at all. And so when you factor that in with, like, crazy credit card usage and massive debt and interest rates hikes, as well as, manufacturing slowing down, which we'll get to in just a second, high inflation, all of that's of course not good, because this now shows that the economy is also slowing down. So we'll have to continue to watch this and see if this continues to decline. Once again, this is now confirming that we're slowing down, because, right, we had the ISM manufacturing index come in recently. Now we have the industrial production itself, and that came in negative 0.2% month over month growth. Expected was 0.1%. May was also revised down to 0.1%, as we can see here. And so, of course, when we look compared to, like, March 2020, of course, it's not a large drop at all, but it is a drop, and so we'll have to see if this, negativity, this red bar here continues to expand, because of course that means that industrial production is dropping even more. So, it's a typical news video for me, right? Lots of bearish stuff, I'm kind of always biased, right? I was introduced to finance and economics by Peter Schiff. Of course, I'm biased to the bearish side. Of course, there is some bullish stuff out there, not that I can really see, but I'm sure there is, because I obviously have biased news source. That's, of course, why you should always do your own research. Either way, though, it's going to be interesting to continue watching these numbers. So, once again, not financial advice. Do your own research. Thanks for watching, and I will see you next time.